Welcome to Markets Now. I'm Michelle Rook along with Brad Kooima with Kooima Varilek, and we see a lot of red on the board this morning, both grain and livestock futures, and of course cattle. Yesterday came back pretty decently, Brad, after the cattle on feed report, but we're back on sell mode here today. And what are you expecting as we go forward here, and especially what's cash trade going to do this week? Because that's going to be another big key.
Right. Yeah, I'm sorry. I'm just kind of peeking at the markets here while you're introducing me here. I think, thanks for having me on, by the way. I guess my feeling on the cash cattle, I'll start with that last question first, is, I've been optimistic, as you know. I think now, though, the market, we've lost just a tiny bit of leverage because of what's going on in the South. They are such easy sellers because they're basis traders. Maybe they have a few more cattle. Their cattle aren't as good a quality as ours, so maybe that's why they're discounted as part of the problem. Part of the problem is they don't negotiate. It's also part of the problem. No one needs to kid me about that either. But we were drugged down, I thought, by that poor trade late Friday, as low as 173. They weren't all that bad, but the packer is going to quote the worst one. So yeah, as we start to transition here in the north from these high quality yearlings to these barely there calves that aren't very fat and don't have much grade or yield in them yet. This is very normal for this time of year. So we get bid on our quality a little bit. So I'm not, overtly bearish, but I can see us slip a little bit from here and drugged down by the basis because of the discount that the futures have.
Yeah, and of course, cattle on feed report, the placements number was a little bearish. That factored into the trade yesterday. But let's talk about this correction. How big do you think it could be on the futures board? And do you call that a blow off top here 2 weeks ago now?
Probably. To your question about was that the near term top? I couldn't help but have that old famous saying ringing in my ears that the market will top and the news is the best. Well, $1.85 is pretty salty, for cash cattle, and so. The fact that we're such a big discount is going to cushion this break, in my opinion. But to be able to sustain those kind of prices as you go into supply is going to be a little bit of a challenge. Now, we also go into a great demand period. So that's going to, again, help, I think, soften how far down we go. How far do we break? Well, let's go with, if you would take the cash to 170 to 175, continue this bad basis or good basis, depends on your perspective. If June continues to trade, say 5 to 8 under wouldn't be uncommon. Where does that put you then? It doesn't put you very far from where we are now. I don't know. Could the June sneak below 160 for 5 minutes? Maybe. But the fact that we're such a big discount is certainly going to limit how far we break the market, in my opinion. Unfortunately, I'm worried that it's going to drag the cash down more than have the convergence by having the futures rally.
Well, and I think that's kind of what happened last week. The futures board broke first, and it broke some of the psychology on the cash. But I wonder, like you say, how far can you fall when you're at such a big discount to the cash? And then when will the funds defend this huge long position that they have? Because I think they're long over 104,000 contracts.
They are. And, just a side note there, I would rather be on the fund side. Ask anybody that's tried to buy hogs for the last 2 months, than to try to think I'm smart enough to know when to fade them. Maybe. How about yesterday? There was nothing great about that report. The placements were certainly bigger than any analyst thought. At least way at the high side of the range. Every stayed up a little bit. And I thought that the placements focused again some of the problem of the dryness in the Southwest.
Absolutely.
Where we move the wheat cattle, and it's all in that same category. It looks like it's we've got plenty of cattle for late summer. But someone was willing to buy that $1.50 break yesterday again. I think it's going to be well supported. To me, you're going to have to you'd have to get June's at least someplace below 161.5, and then for the funds to check it. But even halfway back of the rallies, 160.25. I don't know. I think they'll find support there, and I think the funds will defend it.
And let me point out that actually we're below a year ago in terms of all of the numbers that we have in terms of these states and the number of cattle that they have on feed. And I know you've looked at comparisons all the way back to 2014. And last week, you and I talked about the fact that we're not even into the tightest numbers yet.
Right, and I'm not the only one that can read. I mean, I think any analyst that or any kind of a fund that has any sort of fundamental input, and some of them do, they any barring some sort of black swan demand event, we're not even anywhere near there. We've got like 700 or 800,000 more cattle on feed right now than we did April 1 in 2014, which is kind of the benchmark bull market year, right? So when do the tightest of the numbers, if it rains, and the cow belt is getting a big chance at rain here this week for a lot of the cow calf country, so that they hold heifers. Well, by the time we get to this December and first quarter of next year, we'll have I think we'll make 2014 look like a Boy Scout camp out in terms of how tight the supply gets.
Yeah. All right. So hogs are trying to come back here just like they did yesterday, but how much of that is just a function of the unwinding of these cattle hog spreads?
Well, I think you're onto something, Michelle. I really think that's a big deal on the hogs. All the way up on the cattle, the hogs struggled, and why an algorithm would want to trade a cattle hog spread is slays me, but obviously they're having their way with it. It's a thin market. So we sit here now, and I thought yesterday in particular, but we did have that technical reversal the day before yesterday in the hogs and had good follow through yesterday. So we've got a technical toe hold here for the first time in a while, which might be enough to, start to think about, well, where do we spook these funds that are big short in the hogs? It wouldn't take a lot, in my opinion. I think you get another 100 points higher, you start to get through some of those quick moving averages, and that might be a start. I could very easily see the hogs rallying with no change in the fundamental news whatsoever because of the big break that we've had. I mean, we used to always rally going into May. What happened to the good old days, right? So we'll see. Yeah. I think that the hogs have a little chance here, better chance than they've had in several weeks.
The lean hog index is yet to catch, though, and that's kind of one of the other keys, isn't it?
It feels like this cash hog thing is going nowhere, unfortunately. Packer there's got just a tiny bit of leverage, of course. So these numbers are going to have to snug up a long ways before they do anything or have to do anything.
Any updates on the Madison, Nebraska plant? Are they going to be back up here fairly soon or not?
The last I heard, they were going to lose this week and are expected to go again next week. Tyson says they're going to kill extra Saturdays to make up for the shortfall. It's about an 8,000 head facility. So we think they'll get within a couple, 3,000 of what they would have done if they boost their Saturday kills up. So the market, I think, is thinking it's a non-factor.
Yeah, it didn't seem like it traded it yesterday for sure. Okay, corn and soybeans, you've been bearish, and obviously we took out key support areas, especially in new crop last week, and then slid through some more support here yesterday. And obviously this big Brazilian crop is pressuring the market, but also the fact that it looks like nobody's concerned that we're not going to get planted.
Yeah. I'm on the farmer's side. I am one, so I don't take this personally, but yes, the market coming off extremely high levels. Yes, the basis is strong on the corn. Yeah, trust me, I know I buy corn every day because I feed it. But okay, the market has now started to talk about things like where are we priced at within the world market, and we are not priced competitively in the corn and certainly not in the beans. So when you get a deal like yesterday where China says, oh yeah, we're going to buy some corn from you, oh, never mind, which I don't understand how that works. How that deal
that cancellation was not good for the market.
No, it really swept the legs out from underneath it. You're absolutely right. And then turn around and have them buy it from Brazil. It just shows you where we're at. Now, we'll make adjustments, yada, yada, but I'm afraid that the adjustment is that you take our prices down to where we're competitive. Certainly, the stage of where they're at with the South American bean crop, where they're got all kinds of it for sale here for a while, could be a factor too. But weather, of course, is what the market certainly cares about too. It depends who you talk to. They talk about, well, it looks like it's going to rain a little bit in the Corn Belt. Is that bullish or bearish? My feeling was that it's bearish because we need rain. Whether we delay the planting a day or two is probably not as significant as the fact that getting some moisture, try to do something about this subsoil moisture depletion. And where I live, it's still very dry, drier than last spring. But planters are rolling. I'd be sensitive. You can't probably sell a 40-cent break on the corn here that we just had, but I would certainly sell a 20-cent bounce.
Sounds good. And I'm with you on that. Thanks for joining us. Brad Kooima with Kooima Varilek, and that's Markets Now.